Morning, everyone. I am the host for today's webinar. I am Nitin Kulsres, Assistant Professor from the Parul Institute of Business Administration, Parul University. On the behalf of my institute, I offer my regard to all the people who join us. Today's webinar is on the topic of industrial insight on a GST, and for which I would like to introduce and welcome our webinar speaker guest, Ms. Krishna Bhatt. I welcome.
Thank you, sir.
She is a technology consultant and business analyst, and presently working as in a Signet Infotech Private Limited at Mumbai. She is having a board experience in a technology implementation across the different industries at the national and international level to optimize the business processes and also assist with product development. I would like to also share her roles and responsibilities. She is responsible to end-to-end client account management for technology products for UK, Dubai, and India. She is also working closely with the high-profile clients in-house as well as the vendors, technology manage and the business teams to understand business processes and source system to help them to implement the tax compliances solution with the end-to-end automation for tax reporting to government entities. She also worked as a business analyst for developing an accounting product phase that is listed on a Goods and Service Tax Network portal of India, GSCN. She has also done some personal projects. First one is MediPlus, one-stop shop for pharmaceutical inventory management. That is a software and mobile development application. Second application project, she has worked with the Finance Ka Funda, mutual fund advisor mobile application. And about her education, she has done his engineering from the institute from the Valsad, that is a Sardar Vallabhbhai Institute, Patel Institute of Technology, and she is right now having a 3 to 4 years of experience in his field. Now I welcome Ms. Krishna Bhatt, madam, to present her view on her expert knowledge on the today's webinar topic, industrial insight on GST. Welcome you, madam.
Thank you so much, sir. Thank you for giving this detailed introduction of me. Okay, I'll just share my screen for the presentation that I've prepared. Right. Let me know if you can see my screen. Yes, I hope my screen is visible.
Yes, it is visible. Madam, you can go ahead.
Okay. Okay, so just for everyone's ease of understanding, I have prepared the agenda in a certain way. So first, I will start with why. What was the need to bring GST in India? Why was the original taxation system not at all working over here? So why GST is the topic with which I'll start my webinar. Then I'll just take basic concepts and jargons of GST to understand that what GST actually is and what business needs to pay to the government. And then we'll move further to GSTN portal, a website introduced by government to make the tax compliance easier. Like to report your tax to the government, there is a web portal introduced by government. So that is a GSTN portal. So we'll just go on the brief understanding of how the GSTN portal actually is. Then how does large companies comply with GST? So based on my experience with working with large corporates, what are the challenges that they are facing with tax compliance and how technology is being offered to ease out that challenges that they are facing as of now? And what addition to GST is the last topic that I was planning to cover, which says that what are the recent developments over and above GST in India. Okay, I'll just start with why GST. So GST there are two types of taxes in India, first of all. One is the direct tax and the other one is indirect tax. Direct tax is your income tax that you pay based on your salary. So that is your income tax. And then there is this indirect tax that you pay to the government based on the sales and purchase that you have made. So every business needs to pay GST to the government based on all the sales and purchase of goods and services that they have made across through other businesses. So GST under indirect taxation was introduced by Government of India in 2017 to eliminate the cascading effect of taxes. GST was introduced under Article 24(6)(a) via Constitution 101st Amendment Act 2016 on 30th June at midnight. So 30th June ko midnight pe the GST was implemented, and from 1st July the GST was applied to all the business and the large corporates of India. Now, why was there a need to bring GST? I have said over here to eliminate the cascading effect of taxes. Now, what is cascading effect? Cascading effect is that you are paying tax on your taxes. So let's say I have presented one example over here, as you can see on the screen. Let's consider a classic example of manufacturing a shirt. Okay, now to manufacture a shirt, what do I do now? First, I will buy the raw material. So let's say I have bought a raw material at the cost of 100. Now, initially, there were 9 different types of taxes available. There was VAT, there was excise, there was octroi. So there were a lot of confusion at which tax was supposed to be paid at what instance. So that was the concern. So to simplify that, I have just taken 10% tax over here across. Okay, so let's assume that I have bought a raw material at the cost of 100 rupees, जिसके ऊपर I have paid 10% taxes to the government. So what I collect from the person who buys. So let's say abhi manufacturer has bought this raw material from somewhere. So the amount that he had to pay to buy that raw material was 110. Now what does manufacturer do? Now manufacturer adds or manufactures the shirt. So shirt now is ready to sell to the retailers. So manufacturer will add 40 rupees his cost for manufacturing the shirt. So now the total amount of the shirt will become, so actually the total cost should be implied on 100%, on 100 rupees. Actually the tax should be implied on 100 rupees. But what manufacturer is doing is, what taxes he has paid, he again adds 40 rupees of his effort on that cost, and then again the tax is being collected from the retailer. So now retailer has to pay 165 rupees. Now further retailer also add 30 rupees from his end because of the shipping charges and other charges that he might have incurred. So now the 165 plus 30 rupees of the additional charge, that comes to 195. And now from the shop owner, he also implies tax on that amount and then collects the total of 214.5 rupees from the shop owner. Abhi shop owner also wants to add some value on that, so he wraps the material, he keeps it in the shop, he gets the material to his shop, his warehouse cost. So what he does is he adds 20 rupees to the 20 rupees to one product of it, one product of his. So that is, so 257. Now on 214 also the tax is implied. That is 23.45 rupees and the total of 257.95. So at the end, यहाँ पे the customer is suffering. Ideally, the customer should only be paying 190 rupees of total because that is the actual amount. 190 pe the end customer should be paying the taxes. Only on 190 rupees, the 10% tax should be applicable. But instead of that, we are at every step in the manufacturing process of the shirt, the tax is being collected by every stakeholder. And in the end, it is customer who is suffering. So this is called the cascading effect. And also, so this was the cascading effect. Apart from cascading effect, what were the other reasons of, what were the other causes of cascading effect? One, the states were getting unequal revenues. As I explained, end customer was the one suffering. That is, we are the one that was suffering because we had to end up paying taxes 3 times instead of just 1 time. So that was also initially before GST. We did not have uniform tax across nation. We had different tax rates in different states of India, considering the revenue of those states. So let's say in Gujarat we were collecting taxes at 14%. In Maharashtra we were collecting tax at 9%. In Kerala we were collecting tax at 20%. So there was no uniform tax rate or tax slab across the nation. So what industrialists were doing was, जहाँ पे there is less tax. So let's say Maharashtra में there is less tax. There is only 9% tax. So I was buying the material from Maharashtra. So I just have to pay 9% tax. And now I come to Gujarat where the tax is 18%. That is almost double. So now I am selling the goods. I am selling the end product to a customer at 18% tax. So यहाँ पे customer industrialists were getting like doing fraud, and they were getting more revenue, almost double the revenue than what he had actually spent on that material. So that was happening. So to eliminate this, government introduced GST. In GST, we have, as it is, GST is termed to be one tax, one nation by the government. So first, the reason to implement GST is to avoid such causes for avoid such frauds caused by the company, so that business cannot do any industry cannot do business across different states without paying taxes to the government or by paying less taxes. So to eliminate this, GST was introduced. Second was that customer just have to pay tax one time. He does not have to pay taxes three times. So यहाँ पे the customer is getting the benefit. And third, GST is a destination based tax. And VAT was a supplier based tax. Destination based tax is जहाँ पे goods and services are being consumed. So let's say if I am purchasing something from Maharashtra, so the revenue of the tax revenue goes to Gujarat's government. It does not go to Maharashtra's government. Okay, so it is a destination. The higher ratio of the taxes goes to the Gujarat government, not the Maharashtra, because I am consuming or I am getting the services or goods in Gujarat, not in Maharashtra. I am just purchasing from there.
Right, madam.
Okay. Now we studied that what was a GST in India when it came. What is the global take on GST? So actually, France was the first country to implement GST to reduce tax evasion. I think France GST was introduced in 1954. So not very soon. It was in 1954 when France had incorporated GST. After France, total of 140 countries post France have implemented GST, with some countries having dual GST, that is Brazil, Canada, etc. Dual GST model. Now, what is dual GST model? Dual GST means that tax GST is collected. GST is levied by both central and state government. Internationally, we can call federal or provincial governments. So province is nothing but state, and federal is something that is sent at a central authority. That federal is a central authority in the outside countries. So below that, I have given the comparison. So India follows Canadian model of dual GST. Okay, and also below that, I have given certain comparisons of GST with different countries. So in India, we have goods and service tax. In Canada also, we have goods and service tax, that is federal goods and service tax, and we also have a harmonized sales tax. And then in UK, we have value added tax, which is VAT. In India, we have 4 tax slabs, which is 0%, 5%, 12%, 18%, and 28%. In Canada, we just have 3 rates. We just have one rate for GST, that is 5%. And the harmonized sales tax, which is HST, varies from 0% to 15% based on the luxury of item, whether the item is for the basic need or whether the item is for example, car is considered as a luxurious custody. So a highest amount of rate is charged on car. And let's say salt or flour that we used to eat, or even vegetables and fruits, that is considered to be an essential need. So lowest percent of tax is charged on that. In UK, we have again 2 rates. which is 20% rate and 5% rate. Apart from 5%, we have exempt and zero rated. So educational services, medical services falls under zero rated and exempt sales, exempt supply or purchase of services. What is the threshold limit for registration? Which businesses or industries have to pay these taxes? So in India, the threshold is 40 lakhs. So any business having a total annual turnover of a particular financial year of 40 lakhs has to mandatory register for GST. Below 40 lakhs, it is voluntary. So if you want to register your business on the GST portal, it will not deny you to. You can. But for businesses having turnover 40 lakhs and beyond, they have to mandatorily register. For Canada, similarly, the threshold is $30,000, which is approximately 15.6 lakhs in India. And in UK, we have 73,000 euros, which is approximately 61.32 lakhs. Yeah. Okay. Now, apart from India, Canada, and UK, because those are the I have selected those countries because those are the countries students are frequently visiting as of now. In this year, I have seen most of the students have visited Canada or UK to complete their post graduation. So that is the reason I have considered these three countries first, and the rest I have considered Singapore, Malaysia, and Dubai. Dubai because I had some idea on it. So similarly, as India, Singapore also has GST, Malaysia also has GST, and Dubai has VAT. As we have seen the rates in India, the Singapore has just 7% rate, and then we have zero and exempt, which is for medical services, educational services, etc. Malaysia, we just have 6% tax rate across global. There's just 6% rate on all goods, and only exempt thing over there is medical services and educational services. Then we have Dubai, where we have 0% rate. 5% we have on most goods. So every goods in Dubai is charged on 5% tax rate. 0% is, as I said, just for medical and educational services, etc. 5% is on most goods. And over there, on tobacco, energy drinks, and on tobacco, energy drinks, 100% tax is levied. So whatever is the actual price of the Coke that you are having, double that price and convert that into Indian rupees is what they have to pay for one can of Coca-Cola or Pepsi. So there is 100% tax levied on it. The threshold in Singapore is, as I have mentioned, 1 million, which is approximately 4.8 crores, which is huge. In Malaysia, we have 500,000 Malaysian rupees, which is 75 lakhs in India. And then in Dubai, we have 3,75,000 dirhams, which is 76 lakhs. So as you can see from the comparison over here, the least threshold is in Canada, and after Canada, the least threshold is in India. Rest all countries have a very high threshold. And if you are wondering about what USA have, USA does not have GST, as USA just follows their original method of taxation because it is because the USA government is self-sufficient in terms of funds. So USA does not have GST.
Okay, madam.
Now, who needs to pay GST? We have learned that this is the threshold limit. All these industries have to pay taxes. These are the tax slabs. Now, who in the end needs to pay the GST? So it is must to pay GST if your turnover of the business for a particular financial year. Financial year is something that is from let's consider Indian financial year. So Indian financial year starts from April 2020 to March 2021. So that is the complete arrangement of a financial year. So if your business has collected the revenue or the profit, the turnover of the company is 40 lakhs or beyond, then they have to compulsorily mandatorily register, as I have said. Initially, when the GST was introduced, the threshold was 20 lakhs, but it was too low and businesses were not able to comply with that need. So because 20 lakh turnover are very small businesses. So it was very difficult for them to collect the data and report that data to government on monthly basis. So that is the reason government then further extended this threshold to 40 lakhs instead of 20 lakhs. Other businesses with lesser turnover can, however, register voluntarily, because it is important for you to register as a business, because then otherwise the registered taxpayers will not do business with you. Because in that case, if you are purchasing from unregistered person, then the entire liability to pay taxes on to the government comes on me as a buyer and not you as a seller. Okay, so if I'm purchasing from some unregistered taxpayer, so then I have to pay the taxes to the government, because you are not registered, so you will not pay taxes to the government. So in the end, I will have to pay the taxes to the government in case of RCM. So major of the businesses, the high corporates does not prefer purchasing goods from someone who is not registered. So it is mandatory for any small business to register even voluntarily. You can also, so there is also an option of to register as composite taxpayer. So with 40 lakhs to 1.5 crores turnover, there is an option. There is an option for the taxpayer to register as a under the composition scheme. Composition scheme is that you just have to pay 1% tax on total turnover, and that too on quarterly basis, not even monthly basis. So if your turnover is up to 1.5 crores, you can register under composition scheme, where you just have to pay 1% tax and you just on the total turnover, there are no tax, you don't have to pay taxes as per the tax rates. You can just pay 1% tax on the total turnover, and every 4 months you can pay this taxes, every 3 months you can pay this taxes. Now the disadvantage of composition scheme is that, one, you cannot claim the ITC, and second, you cannot collect the tax from your customer. Because you are not paying taxes to the government, you cannot collect the tax from the end customer. So that is the drawback with having to register under the composition scheme. So majorly the businesses only registers under the regular registration scheme. In which cases it is mandatory for a business, in other cases, it is mandatory for business to pay GST is making an interstate supply of goods and services. So irrespective of the turnover, whether your turnover is 40 lakhs or not, if you are making an interstate supply of goods and services, so if I am manufacturing something within Gujarat and if I'm selling something in Maharashtra, then irrespective of my turnover, I have to pay the taxes to the government. And in that case, I have to register. In that case, it is okay if my turnover is not up to 40 lakhs. It is even if it is below, if I'm making an interstate supply of goods and services, I have to pay the taxes to the government. Then other one is any person who supplies goods and service in the taxable territory and has no fixed place of business are referred to as casual taxable persons. So any person who keeps on moving across India to do their businesses, so those are referred to as casual taxation person. The registration is issued to such person, and only for 90 days they have to just register, and they have to pay the taxes for all the supply that they have made across the nation. Now, the next person that who needs to pay the taxes is a non-resident taxable person. Now let's assume someone who is staying in Canada has a business in India. Let's say a small cafe is being run by a person, someone who is outside of India, who is staying in Canada. Now, because he is staying in Canada, he does not have to pay the taxes over there, but he has his business in India. He has his restaurant business in India. So for that restaurant business, he has to pay, he has to register as a non-resident taxable person, and then he has to file a return, and this registration is issued for 90 days. So any non-resident taxable person, so any person who is staying outside of the country but doing business in the country, has to pay the taxes to the Indian government. Now, person required to pay under reverse charge mechanism. Okay, so what is reverse charge mechanism? First of all, reverse charge mechanism is something on which I am paying the taxes. Actually, supplier is the one that pays taxes to the government. So I, as a supplier, if I am supplying something, let's say I have a shop, I am supplying shirts. Okay, so for all the sale that I have made of shirt and all the tax that I have collected from the customer, it is my responsibility to pay those taxes to the government for all the sales made. Now, let's say if I am buying something from someone, so instead of supplier, if someone is buying from me, you are, let's say an XYZ person. is buying a shirt from me. So he has to pay taxes on my behalf. I am not paying the tax as a supplier, but the buyer is paying tax in this case. So this is called reverse charge mechanism, where buyer instead of supplier is paying taxes to the government. The reason could be any. So there are certain services, and there are certain services which falls under RCM category. So let's say an advocate services. So if I am hiring an advocate, so if I have procured or I have purchased services from an advocate, some legal advice from the advocate, in that case advocate does not have to pay taxes to the government. Even if he's registered, he does not have to pay taxes to the government. If I am purchasing services from him, I am the one who is supposed to pay the taxes to the government, and also supposed to pay the money, the total charge of the legal advice that he has offered to that advocate. So advocate and legal advices falls under the reverse charge mechanism. Also the transport services. So if I'm hiring some transport agency to move my goods from one place to another, so in that case transport agency will not pay the taxes to the government. I am the one who has hired them. As a buyer, I have to pay the taxes to the government on behalf of those on the goods transport agency. So these are certain example of reverse charge mechanism. So in that case, the buyer has to pay the taxes. So if I'm a buyer and I'm purchasing the services, if I'm a registered buyer and I'm purchasing services from someone who is not registered, or someone who is advocate, or someone who falls under goods and service goods transport agency, then I have to pay the taxes to the government. Now, distributors or input service distributor. So, input service distribution. First of all, let me explain you what input service distribution is. Let's take an example of a Kotak Bank. Okay, now Kotak Bank is a huge bank who has outlets or who has offices across India. In every state, Kotak Bank has its own office. Okay, so in that case, what input service distributors do is, let's say Kotak ka head office is in Maharashtra. Abhi Kotak ka head office is in Maharashtra. So what Kotak will do is, whatever services or goods that he purchased, let's say उन्होंने बैंक के लिए stationery खरीदा, and they have hired some advertising agency to advertise about their bank. So all those things are being procured at a central level. So in Mumbai, HO, everything gets procured, and then it is HO's responsibility to distribute it across all the states. So HO mein you have gotten all the service, and the rupees are also collected. The money that for which they have procured the services as well as goods has to be paid by HO itself. But then other states also takes the benefit of it. So in that case, the ITC, the concept of ITC is introduced by the government. Now, let me just explain you what ITC. Okay. Sorry, I'm not able to.
Madam, your PPT is not presenting it.
Yes, I was trying to share a whiteboard, but it is not working. I'll just explain through presentation itself. The concept of ITC is, whatever money that I have given to government, I am collecting it in the form of ITC.
Okay.
Okay, so let's say I have made a sales of total of 1,000 rupees. So I just have to pay 12% tax to government on 1,000 rupees.
Right.
Sorry, let's say consider 10% tax. So on 10% of 1,000 rupees is 100 rupees, which I have paid as a tax, which I need to pay to the government. So 100 rupees is a tax that I need to pay to the government based on the sale of 1,000 rupees made to my customers. Now, what government says is, based on your purchases. So when you purchase something from a manufacturer or a retailer, you also pay tax there. So your tax payable to the government reduces, because the tax that you pay on your purchases is collected in the form of your ITC. So that is the ITC, because you have paid that tax to some person, to the business or any person from which you have procured that services. So that tax you have already paid. So why to pay again those tax to the government? So government had introduced the concept of ITC. So whatever tax that you have paid to the sum paid to your supplier gets accumulated in your account in the form of ITC. Whenever I need to pay taxes to the government, that amount decreases. So let's say ये example में 100 rupees का taxes I had to pay on 1000 rupees का sales, and apart from that I had opted or I had purchased 500 rupees worth goods. Okay, so on 500 rupees worth goods, 10% tax I have paid. So that is 50 rupees. Now on total 100 rupees that I have to pay to the government, because I have paid 50 rupees tax on the purchase that I have made of 500 rupees, 50 rupees will get deducted from my 100 rupees that I have paid to the government. So now I only have to pay 50 rupees to government. So that is the entire concept of ITC. So this ITC, because all the states across India, the Kotak offices across all the states have purchased those services as well. Not only HO, even though HO has paid for those services, but the services are being procured by everyone. Stationery के लिए पे सेंट्रल गवर्नमेंट ने किया, मतलब सेंट्रल और HO ने किया है कोटक के, लेकिन स्टेशनरी जा तो सब में रही है, बट तो सब में रही है. So in that case what the Kotak bank does is कि हर स्टेट में they want the ITC because they have procured, so that they have to pay according tax to the government. They have to pay less tax to the government. So ITC needs to be distributed across the nation. So any entity that has been registered as input service distributor, which has multiple branches across the nation, also has to register. So this was the entire idea of explaining input service distribution. E-commerce operator, you might all be aware, that is Flipkart, Amazon, Myntra, from all the online platforms that you're purchasing goods or services. Urban Clap also comes under e-commerce operator.
That was a very wonderful explanation. I'm sure that a lot of doubts has been clear.
Okay, thank you so much, sir. Okay, moving further, and also the person supplying online information. So we have just talked about goods and services. Even supplying of online information and database access from a place outside of India to the person in India. Let's say Facebook. What Facebook is doing? Facebook is supplying information to each and every individual. So now Facebook also has to register under GST, because they have to pay the taxes on the services that they are supplying within India. Even though Facebook is not an Indian, an Indian developed software.
Right. Madam, your PPT is not right now presenting. Please present the PPT.
Okay. Okay. Yeah, so I've covered input service distribution, e-commerce operator, and a Facebook example which supplies online information. Even the GitHub, you might be knowing, W3 schools are the online platforms where you can learn. Any online platform from where Google is the one that supplies information as well within India. So they also have to register. Okay. Now, talking so much about GST, what are the components of GST? So there are three components that need to be paid. So whenever you see an invoice, there is either IGST implied on that bill, or whether there is CGST and SGST implied on that bill. So what is Central Goods and Service Tax? CGST is something that is collected by the central government for supplies within state. And what is SGST and UTGST? So tax on goods and service to be collected by the state government for the supplies within state. So there are two concepts, first of all, of supplying goods or purchasing goods. Those two concepts are interstate and intrastate. Anything, the movement of goods or the consumption of services is within state. So I am supplying any goods or services. I am supplying, let's say, a washing machine to someone who is in Gujarat. Then it is called intrastate movement of goods, because the buyer and the supplier both are in same state. So in that case, the revenue goes to both the central government and the state government. Both the government collects the revenue of it, because the supplies, so थोड़ा पैसा जाता है सेंट्रल गवर्नमेंट को, थोड़ा पैसा जाता है स्टेट एंड यूनियन टेरिटरी. Division ideally equal होता है, 50% to central and 50% to state, but that is the complete decision of the central authority. So whatever central authority decides based on the needs of respective states, they divide these taxes across. So that is how the but from us they collect two, let's say they collect two taxes, both the taxes. They collect central goods and service tax as well as they collect SGST. So CGST and SGST is the one that is levied on intrastate movement of goods. So अगर आप कहीं रेस्टोरेंट में भी जाओगे, if you go to DMart to purchase something, you check the bill that you receive from there. Always वहाँ पे लिखा होगा if 18% rate is there, so 50%. So 9% होगा SGST को और 9% होगा CGST को. And then there is a concept of interstate, which is interstate movement of goods. So I am supplying or purchasing something from Maharashtra to Gujarat. So there are two different states, and the procurement or movement of goods or services happening interstate, between two states, not just one state, not just within state, but between two states. So in that case, integrated goods and service tax is implied. So this is a power of the central government to levy taxes, and then फिर वो central government जो है वो decide करता है later on कि ये revenue distribute किसके मतलब कौन से state में करना है. So यहाँ पे the place of supply becomes relevant, जो मैंने initially समझाया था that GST is a destination based tax. So place of supply becomes relevant over here कि जहाँ पे मेरा consumption हुआ है. So I am the one who is in Gujarat. I have consumed some services or I have purchased something in Gujarat. Then in that case, जब आप integrated goods और service tax pay करते हो तो सेंट्रल गवर्नमेंट जो होती है वो प्लेस ऑफ सप्लाई को कंसिडरेशन में लेती है कि भाई सब कंजम्पशन कहाँ पे हुआ है गुड्स एंड सर्विस का, एंड उसके बेसिस पे दे डिस्ट्रीब्यूट द टैक्सेस टू डिफरेंट स्टेट. So higher proportion of the taxes goes to the country to the state where the goods and services are consumed. So these are the three components of GST, which is collected by us, by the shop owners, and also the shop owners has to pay to the government. So to government also they have three buckets itself. So in all the three buckets there is a tax accumulated based on the sales that they have made. So interstate के लिए they have to pay IGST to the government, interstate sale of goods के लिए, and for central and state for sale of goods within the state they have to pay central CGST and SGST, and for union territory I have put UT, union territory goods and service tax. So in that case UT GST is applicable.
Yeah.
Apart from this major components of GST, there is one additional tax which is cess, which is an additional rate imposed by the government to raise fund for a specific purpose. So जैसे अभी बीच में केरला में floods आए थे, so Kerala was completely flooded. So in that case, a state cess rate of 1% was introduced by the government so that they can collect the revenue for the Kerala government. So in such cases where the particular state needs some assistance from the nation, in that case, an additional tax called cess is being imposed.
So it is this cess is decided by the central government only, or there is some council meeting is happening for that?
Okay, so they have GST council meetings, and based in the GST council meeting, the GST council meeting happens at the central level itself.
Yes.
So where the different states put their point forward, and based on the revenue that a state has, and if any natural calamity has occurred, and if the state does not have enough funds to recover that destruction, a cess is introduced by a central authority so that they can collect a revenue for a particular state. So 1%, whatever bill or whatever amount that whatever total bill amount is, uske upar 1% extra tax we have to pay in that case.
Right.
Now, what are the different tax rates in India? I had explained in brief initially. I'll just explain in detail. So there is 0.25% rate on cut and semi-polished stones. Only for cut and semi-polished stones, this 0.25% tax slab is introduced. Apart from that, there are just four basic tax rates which is in India. That is 5%, 12%, 18%, and 28%. 5% is for household necessities like edible oil, sugar, spices, tea, coffee, etc. 12% includes computers and processed food. So आप अगर restaurant में जाओगे, so restaurant में 12% tax would be levied from you. पहले ये 18% पहले the restaurant food came under 18% tax slab, but then based on the council meeting and discussion, it was further reduced to 12%. On 18% comes hair oil, toothpaste, soaps, capital goods is something that I as a industry procure for for the usage. So let's say अगर मेरा IT industry है, if I have purchased, I have an IT industry itself. My revenue comes from IT products and services. So in that case, my capital goods will be laptops purchased for my employees. So in that case, those are considered as capital goods, which is an investment to make profit for the business. So any investment in the business to make profit is considered as capital goods.
Okay.
फिर इंडस्ट्रियल इंटरमीडिएट कवर्ड इन दिस स्लैब, और इंडस्ट्रियल अगर कुछ भी whatever as per industry, if something that they are procuring, that comes under 18% tax slab. 28% में luxury items come, which is cars, AC, refrigerators, cigarettes, aerated drinks. So this all is a luxury items that we procure. If you were not knowing till now you know that even a AC, even a fridge is considered as a luxury item in terms of GST. So you have to pay 28% tax on that.
Beside that, any other additional cesses also implement on over and above 28% in a luxury category?
Yes, sir. So over and above 28%, there is some cess rate. So there are different, there are too many cess rates which is defined by the government. So अगर there is purchase of coal या ऐसा कुछ है, processed coal, so in that case a cess is implied. Over and above 28% tax. But cess cannot be beyond 1%. 1% से below ही होगा cess.
Okay.
Cess cannot go up to 2%. It only has to stay in the periphery of 1% because it is something that is collected over and above the GST that we pay.
Right.
Okay. Now, how do we know that the particular item that we are selling falls under this tax rate? So, अगर मैं as a business woman, for example, if I am doing a business, मैं शुगर को अगर मैं कुछ और करके लिख देती हूँ, और या तो फिर let's say I am selling toothpaste. In that case, I am selling toothpaste, but I have not written an item over there. I have just written an item name, which is whatever item name I have written. I have not mentioned whether it is a toothpaste or sugar. So in that case, I am collecting 18% taxes instead of 5% taxes from the customer. So which is not right. So what government has done to restrict this as well is कि हर एक item को एक separate code ही दे दिया है. So there are two concepts. One is the HSN, that is a code given to a good. It is a harmonized system nomenclature. That is a code associated with goods. So even as any item that is as simple as mobile or book or even a pen has their own HSN code. So you have to mention that HSN code in the invoice. Based on that, the government will know that the good books ka, if you have sold books, so that there is an HSN code of books that has been mentioned. So on books, let's say 12% tax is being levied. So that is the way how government puts the restriction on business, and that is how government knows that this business has to pay this much taxes to the government, so that any industry does not have any chance of doing fraud. And for services, so as I explained, for goods there is HSN, and for services there is services accounting code, which is SAC. So services like educational services, then services, legal services, transport services. So those kind of services has their own service code, which needs to be mentioned on the invoice. Okay, apart from this basic 4 tax slabs, there are 4 other types of goods, which is nil rated, exempted, zero rated, and non-GST. In all these cases, there is no GST to be paid. You don't have to pay any tax to the government. You just have to declare कि इतना मेरा नील रेटेड था, इतना मेरा एग्जेम्प्टेड सेल था, इतना मेरा जीरो रेटेड सेल था और नॉन जीएसटी. You don't have to pay taxes on that. Just you have to declare. So in nil rated comes grains, salt and jaggery. In exempted comes bread, fresh fruits, fresh milk, curd. So all milk is the major exempted. So milk के ऊपर आपने देखा होगा कि when you go to buy milk, there will not be any tax on milk. Even on bread. So these are something that you go to a vendor and just buy. You don't pay taxes on it.
Right.
And then zero rated is for exports. So if I'm supplying something outside of India, so in that case, I just have to pay customs. I don't have to pay tax to the Indian government because the goods are going outside of India. And as GST is a consumption based tax, so वहां पे outside of country में तो कौन ही tax pay करेगा India को. So in that case, those are declared as zero rated supplies. And then non GST. So पेट्रोल है, अल्कोहल है, comes under non GST. So अभी GST के परव्यू में ये आइटम पेट्रोल है, अल्कोहल है, वो फॉल नहीं करती है. So I have also given a link over here which you can refer. यहाँ पे सारे HSN और SSC codes listed है. So over here there is a complete list of goods and services. So here you can see that a code is associated. So यहाँ पे temperature of the milk के basis पे code assign किया गया है. And government has mentioned that total 5% tax ही इसके ऊपर levy होना चाहिए. अगर 5% से ज़्यादा if it is being collected, then the government will send notices and you also have to pay fine on it. Then milk and cream, या तो फिर जो हम लोग कंडेंस्ड मिल्क यूज करते हैं उसके ऊपर भी 5%. So this is a complete list. So I have given just the link for that. Okay.
In the chat box?
No, over here itself in the PPT. If you want me to mention it in chat box, I can. Okay. Okay, I'll just have to.
It will be okay.
Okay. Done.
Okay, thank you.
Okay. Now, next is GST in portal basics. So now we have covered basic concepts of GST, who all has to pay GST. Now, how to pay GST comes into picture. Okay, Abhi, I know what I need to do. You are aware that when GST is applicable, what GST is applicable. Now, how we'll get on the how of GST, that how to pay these taxes to the government. So we'll start with registration. So if you are a small business, if you have a small business, you need to register on the government platform. So as I said, the GSTN is the portal that is developed by government to make the tax compliance easy for the end customer or end user or any businesses. So this is a registration link I have provided in the presentation itself. So over here in the presentation, I have provided the link. From here, you can go to the government portal, GSTN portal. And over here, you just, so यहाँ पे services के अंदर registration में new registration. Okay, यहाँ पे you have to select that what are you? Are you a GST practitioner? So basically, for example, if there is a tax consultant, so a tax consultant did pay taxes on your behalf. So tax consultant also has to register. If you have appointed me as a CA for your organization, then I also have to register and I have to declare over here that I am paying taxes on behalf of this respective organization. So over here, all the types of taxes that we have declared, that who needs to pay GST, who needs to pay GST, mein, whatever people that we have covered, the list of all those people has been mentioned over here. So non-resident online service provider, which is Facebook, United Nation body, that is UN, government authorities, which is government affiliated institution, that is UN body, GST practitioner, e-commerce, जो हमारा फ्लिपकार्ट है तो उनको e-commerce के अंदर रजिस्टर करना होता है. As a normal business has to register under taxpayer, so they have to select a taxpayer over here. So this is a complete form. You can go through the details. यहाँ पे they will just ask for your basic details and you can click on proceed. Once you have clicked on proceed, you will they will ask you for OTP verification on your mobile number, and the registration is done. After this registration, once the registration has been completed, you will get this GSTIN number, which is unique for every business. So the how is the GSTN number over here? So GSTN number is actually a 15-digit number, जिसमें फर्स्ट टू जो होता है वो स्टेट कोड होता है. तो यहाँ से पता चलता है दैट कौन से स्टेट का ये रजिस्ट्रेशन है, वेदर माई बिजनेस इज इन महाराष्ट्र, दिल्ली, वेयर. सो फ्रॉम फर्स्ट टू डिजिट यू कैन आइडेंटिफाई दैट वेयर इज दिस बिजनेस गोइंग ऑन. फिर सेकेंड जो आता है आपका, सेकेंड 10 डिजिट्स इज योर पैन नंबर. सो आपके बिजनेस का जो पैन नंबर होता है, और इफ आई एम एन इंडिविजुअल डूइंग माई बिजनेस, तो मेरा पैन होता है. So in that case, my PAN needs to be mentioned over here. And 7, Z and 3 are a random number from 1 to 0 and from A to Z. It could be any number. Z is there by default for a regular registration. So if I'm a normal regular taxpayer, तो मेरा Z यहाँ पे 14th digit Z आएगा, and 13th and 15th digit can be any value. Okay. Now, how does industry do this tax reporting? Where this data is mentioned? Where do we put this data or account this data for tax reporting? So, just the small vendors, the small businesses, they use Tally. Majorly, they use Tally. Or to make this job easier, government has also provided them a list of free accounting software which is GST compliant, to make sure that as many small businesses become compliant to GST. So that is so Tally mein you do the accounting of your sales and purchases, and based on that, whatever GST is computed, you pay to the government. So that Tally is for small businesses. जैसे large organization होते हैं, medium and large scale organization, they don't use accounting software, they use ERPs, because उनको बहुत सारी चीजें account करनी पड़ती है, because it is a vast organization. There are lot many things going in the organization. There's a accounting of employee data. अगर employee को कुछ आप as gift दे रहे हो, उसका भी accounting होता है. Whatever sales that you have made, all the list of customers and vendors that they have had. So they use ERPs. The popular ERPs that I have found across my clients is SAP, Oracle, Microsoft Dynamics. These are the ERPs that a large organization would use, like Tata Power hai, Cadbury hai. So they use majorly SAP. SAP इसलिए because SAP offers global license. So global license. So if I'm operating not just within India but also across the India, so SAP I just have to get one global license. That's it. So SAP is the most commonly used ERP across all the large scale industries. I'll just skip this slide because all I've covered already in this invoice. So okay. What needs to be mentioned? What needs to be reported to government? So आपको आपका खुद का GSTIN जो invoice में आपको यहाँ पे दिख रहा है, you need to report your GSTIN number, your state, the PAN of your organization, the invoice number, bill number, the invoice date, the reference number, the customer to whom you are selling. So customer का name, if he is registered, then उसका GSTIN, their billing address and shipping address. Billing I might be doing, let's say मैंने bill यहाँ पे जो भी खरीदने आया था, मैंने bill उनको किया है. लेकिन अगर उन्होंने बोला कि नहीं मुझे डिलीवरी तो महाराष्ट्र में चाहिए, भले मैं गुजरात में यहाँ पे बिल कर रहा हूँ और आई एम पेइंग इन गुजरात द अमाउंट, बट एक्चुअली गुड तो जाना चाहिए महाराष्ट्र में. सो इन दैट केस द बिलिंग एंड शिपिंग एड्रेसेस कैन बी डिफरेंट. The country of supply, India. The place of supply, the consuming state is Andhra Pradesh. The due date to make the payment is this. And these are all the list of items. So items यहाँ पे मैंने लिखी है, item का नाम कि dry fruits है, freight charge है, saffron है, और उसका HSN code. So I have put HSN code and the quantity. So यहाँ पे HSN code, quantity, if there is any discount, तो आपका taxable value कितना हुआ. So taxable value is taxable value. तो आपके कितने रुपीस का taxable value हुआ, and on that taxable value the CGST and SGST is being implied, because ये intra-state है तो यहाँ पे CG और SGST mention किया है, CGST और SGST. अगर interstate होता तो यहाँ पे IGST mention किया गया होता. And what is the total amount of the invoice? So this is how your actual invoice looks like. Now on, when you just go to any restaurant or DMart or anywhere, even for movies, you can check the invoice. All these details will be mentioned in that invoice. If it is not, then their invoice is not compliant, and then you are not liable to pay the taxes because आपको tax invoice ही नहीं मिला था, तो then why to pay taxes? So just verify this all details on the invoice that you receive from any supplier of services or goods. Hence further.
That is very important from the point of view of customer, because
Yes.
customers are not aware about these small things, and sometimes the the seller take the advantage of this thing.
Yes, even अभी I have also मतलब recently मेरे साथ भी ऐसा केस हुआ था where I had been to a restaurant in Mumbai itself and they were levying some additional cess rate of 2%. So I was aware about this fact, so I complained. So I didn't have to pay cess at all in that case. But yeah, because I noticed, I didn't have to pay. So there might have been a lot of customers who are not aware about this, and they might have been ended up paying 2% additional cess rate over and above the restaurant services. एक तो service tax pay करना पड़ता है, GST, उसके ऊपर service charge, and then the additional cess. So customer will have to pay a lot of money to the restaurant itself in this case. But restaurant को तो सिर्फ GST pay करना है.
Yes.
Okay. I think we have run beyond time.
Yeah. Madam, I would like to take few questions, which
Yes.
is sent by the students as well as the faculty members. So one of the our faculty, Ketki Madam, has sent me the question for you. What is the difference between the service tax and service charges?
Okay. Service tax is something that is levied or collected by the government. That is the reason it is called tax. And service charges is something that is collected by the business. So जैसे restaurant services है, they collect service charge because they offer services to you. वो waiter आता है, आपको order लेता है, they put the food to you. It is not self service. You are getting service from someone to have that luxurious experience. So that is called service charge. And service tax is what you have to pay to the government for the services procured. So that is the difference between charge and tax. Charge is collected by business and tax is collected by government.
Okay. Second question is, what are the ways that sellers start giving the original bill to the customer? I think you have mentioned in your this PPT.
Yes.
What are the ways for the original bill? Okay, coming to the next question. It is a very small question, that where the GST live on what? GST live what?
Sorry, sir, I'm not getting a question.
The GST live on a what? Whether it is on a goods or services, or on a transfer of the goods and services.
Acha, okay, yes, both actually. So
Okay.
if I have procured goods and services, so actually, okay, so the GST is actually charged on billing, not on the movement. GST मूवमेंट के जो अगर सर्विस चार्ज अगर किसी ने लिया है, मैंने महाराष्ट्र से गुजरात गुड्स अगर भेजा है, तो वो सर्विस चार्ज के ऊपर टैक्स नहीं लगता, लेकिन मैंने सर्विसेज ली है और किसी एजेंसी से, तो वो सर्विसेज के टैक्स और वो गुड्स जो मैंने प्रोक्योर किए उसका टैक्स. ट्रांसपोर्ट के लिए कोई टैक्स नहीं है, लेकिन सर्विस और गुड्स जो मैंने प्रोक्योर किए उसके ऊपर टैक्स है.
Right. Okay. Our next question is from the Mahendra Patel sir, Professor Mahendra Patel sir. In a case of interstate transportation, how I am claim for the GST refund or payment?
अच्छा, in case of interstate आपको ITC मिलता है. So in the initial slides I might have explained what is ITC. So for IGST, if I am purchasing something from let's say Maharashtra, from a different state, and I am selling something in the same state, so IGST का मेरा जो ITC है for purchase from in different state, I have accumulated IGST का ITC that I can set off against my CGST and SGST. IGST सेट ऑफ हो सकता है CGST और SGST के अगेंस्ट, लेकिन मैंने परचेज किया है विद इन गुजरात से और मैं सेल कर रही हूँ आउटसाइड ऑफ इंडिया, सो CGST का रिवर्स सेट ऑफ नहीं हो सकता.
Okay. Madam, your video is not on, I think so. I would like to ask you a last question, final last question. As a businessman, if I am paying a tax, GST, okay, either I pay the GST on a purchase of a machine or any asset, can I claim the credit refund, compensate from my other GST payment? That balance can be done.
Yes, sir. Yes, you can. So whatever taxes that you have paid on your purchases can be set off against all your supply and goods tax that you have to pay to the government.
Thank you, madam, for your enlightening us for this wonderful sharing of your knowledge on a GSC. I am sure that many of our students of Parul University and other people is now very much clear about their doubts on a GSC. You have clear each and every point on a GST in a very simple and elaborative way. I would like to thank you on the behalf of Parul Institute of Business Administration, BBA, Parul University. I would also like to thank all the viewers who had participated in this live webinar. I would also like to thanks Parul Webinar Department for the technical support. I especially thank to the Event Sales Department and the students of the Parul University, especially the BBA Department Principal Shantanu Chakravarti sir and my staff for supporting for conducting this webinar successfully. Thank you once again, madam. And
thank you, sir. Actually, I would like to thank you and Parul University as well for giving me this opportunity to share my thoughts and views on something that I have acquired over past 4 years, the knowledge that I've acquired over past 4 years. So it was a great opportunity for me as well to just explain something that I know to the students of Parul University. Thank you for giving me this platform.
Thank you very much. Now we can end this webinar. Thank you, everyone.
Thank you.
Have a great day.